Good morning, everyone. Mic check. Screen check. Mic check. Mic. I know it's working on this side, but is it working on... Yeah, all right. Yeah, it just seems like it's really quiet. There we go. Okay. I just had to take... had to wake up a second there. All right. Mic check. There we go. Screen check. Perfect. Get this on the right thing here. Welcome. Good morning, SSFTG family. I hope you all had a chance to rest up and get ready for the day ahead. As per the usual, make sure to read through the morning prep PDF on the right side of the screen there. It's very important to understand everything that is inside there. Just a quick note for you all before we jump on in. If you're watching on the YouTube side of things, the stream does have between a 5 and 30 second delay, which will definitely impact the timeliness of what I may be talking about at any given moment. Good morning. Welcome. Where did my drink go? Hang on a second. Caffeine emergency. Oh, there it is. All right. Welcome. Good morning. Hopefully everyone's doing well. I just want to take a second, like we do every day, to thank all of our new members, subscribers, Academy students, VIPs, and everyone in between. Thank you all so much for the support. I'm super excited to have you all on board. Welcome to the SSFTG family. If you aren't a member yet, you have a few different options to check out if you're looking to further your trading education and career. One of the easiest ways to jump in the family is right here on YouTube. You can check out the join button below the stream, which gets access to the extended hours room, where we will kind of continue the morning room with less delay to the end of the session. YouTube members also have access to the community area, where I post all kinds of different chart setups, stock charts, analytics, and more. And of course, every member gains access to our Discord chat server. And you also get that awesome badge next to your name here on YouTube to show your support. The best part is $5 a month, so like skip a coffee at Starbucks and you're set. That's pretty cool. If you want to take a massive step further, though, and understand our trading approach and what it is that I'm doing every day in the room, look no further than the Day Trading Academy. This is where you can learn how we do everything. But listen, this isn't a small little PDF guide you're going to finish in an afternoon, all right? Yes, we do have the quick start course, but I really dig in and really get to the meat and potatoes, if you will, of like the Academy does. You're looking at about 19 plus hours of video course material. And along with that, there's also homework, study guides along the way to really make sure that you understand what's going on while you navigate the course, which I review personally. And you get the DTA upgrade discount too, which is pretty awesome. Then there's the top floor, the executive suite. That's where you're going to find the VIPs. VIPs have permanent access to all that is SSFTG. The Day Trading Academy, private Discord chat, future updates, new strategies, monthly webinars, one-on-one access, everything else. It all comes as part of the package. VIPs gain access to fully dedicated, non-delayed streams as well. And that way, that goes on for the entire session, meaning that they are in the fastest connection that you can get without any delays from start to finish. So whether you're here from the very first time, or you're one of the VIP vets over on the dedicated stream, welcome. I'm glad to have you trading alongside with me today in analyzing these crazy markets of ours. Let's take a look at some charts, take a look at some news, see what's going on for today, see what's all happening out there. Don't forget to grab your morning DP levels. Those are posted. Those are posted for you on the major 7 markets that we take a look at: NASDAQ, S&P, gold, crude, euro, Bitcoin, and Ethereum. Hang on one second. Said I lost the stream for... Oh, okay. Now we're back. Anyway, looking at the news calendar today, incredibly light. There's like nothing. As far as the news calendar goes, basically non-existent. Investing.com numbers, that's about it. So for a Monday, we have a whole lot of nothing happening. Well, at least as far as fundamentals go. The market's actually moving around pretty well. So let's jump into some charts, take a look at what's going on. Let me know if anything looks a little bit different. I had some issues in NinjaTrader this morning and had to reinstall stuff. I think I had all the workspace and everything saved pretty well, though. So we should be good, fingers crossed. But if I missed anything or if I forgot something or if it looks weird, let me know. Because it's a fresh install, fortunately, unfortunately. Anyway, starting off on the S&P. looking at where we're at, we were talking about that double value dip, and that was actually drawn up on the other workspace. But if we're looking at the overall move, the idea is to look for where the market has previously pulled back, right? And that gives us an idea as to what to expect in the short term, about 0.5. And I think the range ended up being about the double pullback was 1.8 to 2. So if we're looking at that as far as a pullback, you're basically taking these numbers and doubling them up. The first one, obviously a 0.5%, that doubled down to a 1% dip, bounced very nicely, but it failed to make a new high and then dropped all the way back down to a new low. That's not great, right? That's going to put a lot of traders on the wrong side of things. So with that drop to a new low, then a lot of people are thinking, well, wait a minute. When's the last time the market actually pulled back heavier than these little double and little smaller pullbacks? Well, we've got to look back over here. And that was a drop of about 1.7%. Well, this is already 1.2% from the top down. So already, immediately, the thought starts creeping into the brains like, well, wait a minute. Is this going to be a double pullback, a double value pullback, but value from a much wider perspective? This 1.6% times 2, right? 1.5% times 2, if you want to kind of cut it in a little bit shorter, front running, etc. So 1.5 times 2, well, obviously you're at about 3% down. And the market hasn't quite hit that yet. We've got a little bit further to go. And again, that's on the upper side of things. But very easily it could go a little bit further, and we're already at almost a -2. We're sitting on top of the -1.5. The probabilities of this staying down here are very low by the end of the day. And noting that we've got a major double down in a much larger perspective lining up with a -2, there's going to be a lot of reasons to be hunting for sellers failing down here, right? Something along the lines of this and then continuing back up. That would allow buyers to really rocket this thing back up towards the highs, catch a nice 2-to-1, maybe even a massive reversal back up to the highs again, right? Kind of a megaphone style. That's what it's looking like at the moment. And so far, it hasn't really hit it yet. A little further to go. One other consideration as well before I forget. If we go and we look at the volume from the top, which technically was this high here, even though it looks like it was this one. This one made just a barely new high there, but that is the top. If we drag that all the way down to the bottom and kind of see what's up, chances are the POC is going to land in the 4350s, right? Yeah. 4353 is the POC where the buyers were coming in off of that zone. And you can kind of see where that area took place just based on the consolidation. Now that we've broken down, until we see anything happen really from the POC perspective, the assumption is that these are longs who are stuck or shorts who are very, very deep in the profit. Either way, both of them are they're both on the extremes. One's feeling incredibly good and the other's feeling incredibly destroyed. That's kind of the scenario that we sort of find ourselves in. And you know, these markets love these V bottoms. It just usually takes a couple failures first. I'm not expecting it to go, screeching out of there immediately, but it definitely can happen. I would really like to see it go just a little further down. Hit that 3%, we'll be golden. Over on gold, for the most part, the market hasn't really. This thing it's just a mess. If we go from the bottom to the top on just looking at the impulse and seeing where we're at, the impulse leg would tell us that if these were sellers who were potentially stuck, they likely got stuck back here. They've been given a chance to get out of break even multiple times, even a slight profit before rotating back up. Now, the fact that it's rotated all the way back up above that 1806 and not in a shy manner, right? This thing just rifled back above the top. That leads me to believe that these sellers probably took that chance to get out of break even. This might be the launching pad that gold has been waiting for weeks now to actually get things going. This quick little dip, this quick reversal, all of that fits so perfectly with what you'd like to see. Now, if we move this a little bit further forward to see if that gives us a little bit of extra confirmation, we can see that it still stayed at 1806. The market went underneath it. It did treat it as resistance, demonstrating that it was, definitively there. And now, just massively reversed off of that low, popping back to the upside. This is really, really good indication that, again, this could be the launching pad. This might be everything the bulls need to get this thing going. Looks great. From the top down, whoops, that's not what I wanted. From the top down, in order for the bulls to take this over, we do need to see them start creeping above some POC action. Currently, that's up above at 1825.6. It would be nice to see that higher low action and some of that take place, but if this is going to V-bottom out of here, chances are that's not going to happen, and we're just going to run right up into the 25.6s. Yeah, settlement's kind of in the middle, but that's not the major objective right now. It would be nice to fill. Otherwise, though, 1825.6 unless we shift the POC. Over on crude oil, more kind of continuation down, I guess. I mean, this still looks like this is part of this giant ABCD to the downside, and we're right around that one move. Yeah, 1.02. So, I mean, it's almost perfect. It fits perfectly with what you would expect to see with an ABCD corrective phase down. The 15-minute chart does make it a little bit complicated because that's all we see. But if we zoom out slightly larger, like a 60-minute chart, we can see where the structure is kind of leading us. We have this major spike into a massive, massive spike in channel to the upside, a spike in megaphone even, which ended up kind of channeling after that. And that leads us to kind of the next point. Where does the channel actually start? And the fact that we have this top that was created up here that was respected, and we can place that on the lows and it demonstrates support across the lows and resistance here, we have to assume that that's where the channel begins. And typically with the spike in channel, as per the usual spike in channel rules at least, the market will go back down. I won't call them rules, let's call them guidelines. They'll bounce off that kind of post, if you will, where the flag meets the neckline of the pole, and then usually reverses back up. Well, if we're looking at that from a structural sense, then we've got the spike into the channel, and we're back to the base of it, right? This is where crude buyers are going to be looking to come in. And it's an ABCD, like almost to the tick. It's perfect. It's falling aggressively, but I mean, you know, bottom trying to catch the falling knife, if you will. Bottom pickers, etc., trying to, you know, get in with the lowest risk possible. Well, while it's falling, that's about the lowest risk you can get. If we're waiting a little bit more, though, for extra proof, then we need to see a bit more on the POC side of things. That's way up at 74.06. That certainly doesn't help things. If we go from the bottom to the top, where's the impulse? Does that help us any? Any day. It's got to reload everything. Sorry, I had to fresh install Ninja this morning, so it's got to re-download all the data. I think I can. There we go. All right. So as far as the POC from the bigger picture, that doesn't help us at all. This would demonstrate to us that sellers are short, 74.06, or longs are incredibly stuck either way. If they're looking for downside objectives, let's see where their 2-to-1s are. Oh, hang on now. Whoa, wait a minute. That's ridiculous. Now, we always say, we don't believe in coincidences. Whoa, 2-to-1 right on top of that negative 2 DP, right at the base of the spike in channel, at the completion of the ABCD. That's bonkers, right? I mean, that's bananas. Unbelievable. So this is a huge zone for buyers. This is a 60-minute chart, right? So if we're zooming into a 15-minute chart to kind of gauge what's going on in a faster perspective, we can see that we've obviously completed the targets, but we need to see some of the sell side failures, get some, you know, higher lows, get something going to prove that the bulls want to come in, and then we'll have a shot at the continuation back to the upside. That would tell us it's still very early, but we are in a huge zone of interest here. Definitely keeping our eyes open on crude. Eyes out. You know what? Fine. Whatever symbols come out. I'm trying to get exclamation points, but jeez. All right. Over on the euro, we've got another very obvious spike in wedge more than channel. The spike point, I don't think we really need to point that one out, but we've got the spike point there into the drive lower. This might end up being a channel, but for right now, we've got a bit of a wedge. It's not really following the guidelines of what you would expect to see from a channel. It's not moving higher. Even if we were to follow along with a lower high, that doesn't even necessarily fit that well. It's a bit awkward. So the way that this is kind of moving inside of this still kind of makes sense more for the wedge, at least for now. until we get a bit more proof. The earlier wedge was here, which we did break out of. Maybe these are breakout pullbacks, but they're new lows as well. That makes it a bit complicated. Might be nice to see a better, cleaner breakout to the upside to give us more proof. Either way, the other concern that we've been talking about for ages now is that the euro needs to shift the POC in order to get anything done and to try to save another 1.5 miles of loading time. The POC is still up at 22.030. So, I mean, as it stands, they haven't been able to shift the POC to the downside. It looks like they tried to in the 1.186s, but couldn't get the job done. They're still stuck. If they're longs, they're still stuck up way at the top. And if they're shorts, they're in a very favorable position to the downside still. Still early. Over on Bitcoin, continuing to the downside a little bit more. This is still the 15-minute chart, but, you know, these three lower highs that we were talking about, we've got the continuation down. We're making lower highs, lower lows still. And the last time that we did make any semblance of a higher high, it immediately failed. Right back down to a new low. Now, that could potentially suggest, if the market were to scream back up again, that this is the bottom, or at least nearer to the bottom. That being said, though, with all considerations, the market is still making lower highs, lower lows. It's losing its ground. It makes more sense to see a deeper pullback. Still, it makes more sense to see a deeper pullback. So, we'll give it some time, I guess. As far as Ethereum is concerned, we've got the continuation here as well. Very straightforward. At first, you know, the concern was, is this going to be an ABCD leg? But now we're seeing this grind its way at the bottom. This may still be an ABCD completion, and we just haven't bounced back up. But this breakout is pretty telling at the lows. This is either going to continue down with some pretty strong aggression, maybe down towards the 1750s, 1700s, or we see this bounce right back up like we were talking about on Bitcoin. V bottom, continue all the way back up towards the highs and back up above 2000. This is their last ditch, right? I really don't see this sticking around for very much longer, especially with the amount of times that the bulls have tried. Zooming out on like the 60-minute chart, just look at this thing, right? If the bulls are trying to get something going, they're just getting annihilated. You've got this first drive to the downside. It barely pulled back. Scream back down to another low, barely pulled back. Scream down to another new low. Maybe this is the completion of the 5-leg move down, right? 5 waves. Nice and easy. But wait a minute, we're grinding down again. If this is going to be an ABCD correction, then we should see this V bottom and jerk right back up. That would give us the clue that we're in the sideways consolidation phase after a 5-wave move down. We haven't broken the previous major swing low yet. From a structural standpoint, it's still kind of intact, you know, but I mean, if we're following these along, we've got structured high, structured low, new high, new low, new high, new low, new high, then they broke down right there. So reversal of trend, new low, barely even a new high. I don't even really want to call that one, but for lack of anything else, new low, new high, new low, new high. Now we're down at a new low. We're continuing the trend. Nothing's changed. Bears still own it. Doesn't matter how much I want to buy it. If there's no reason to, it still feels like a deeper dip makes sense. Look at gold just screaming off that low. Holy crap. All right, let's take a look at the bigger perspective first here. Starting off on the daily. I don't have any of my other... That's right. If we go back... Gotta make sure everything is here. So the previous pullback was 2.3%. Whoops. Come on. Sorry, I've got to redo everything. 2.31% pullback. The only other notable one would be right here. 1.73. 2.3. 2.26. Pretty obvious what we're dealing with here. So anytime that the market starts breaking below that 2% pullback or so, you know, like over here as an example, it started pushing into 3%. When they started creeping under that 2 to 3% threshold, it just dove. And that's kind of the concern right now, because remember we were talking about last week. We haven't seen historically any perpetual bear trends that didn't start with at least 3 bear candles. All of the other ones were 2 failures, 1 failure, 2 failure, 1 failure. Got 3, but then couldn't continue and then reversed all the way back up. So when we have these really consolidated top candles followed up with 3 very strong bear bars down and potential candle gapping, it's still developing, but potential candle gapping to the downside, my concerns are fairly obvious, right? It's like, well, wait a minute. If we're breaking through these little micro pullbacks, then we've got to go same thing we were talking about in the S&P, like we were talking about in the NASDAQ. Except the thing with the NASDAQ is when the market breaks through these pullbacks, it's a heck of a lot more than just 5%. Now we're talking 8 to 12. We're talking the NASDAQ here. This is an aggressive market. And if we go back before that, some of the other larger dives, that was 6.4%. So there is still a hope that the market gets a double value pullback. It has happened before, and that was followed up with a really strong rally back higher. If we look at the way that that last pullback happened, though, that 6% dive, the majority of it was done on one candle, a one-day dive. That's not what we're seeing here, right? This is what we're seeing historically every time there's been a large pullback. A continuous string of bear bars that show some substance usually have some follow through. They tried getting it here, but they never triggered, and it reversed all the way back up. Only 2, only 1, only 1, only 2, not barely. Basically a doji, another bear bar. Strong bear bars at the highs. They got a little bit stuck, right? A little bit stuck. We've got 1, 2. Now we've got third with a strong breakout and follow through. This didn't all happen in one shot, right? It took place over the period of time, and that followed up with another leg. If we look back again, bear bar, bear bar. These are really garbage looking bear bars. But when they finally get that one strong bear bar in there in the mix, it lets loose. Well, if we look at what's going on, they're all strong bear bars, like every single one of them. Now, today might look totally different in the next 7.5 hours, but it's fairly obvious that, you know, the concerns are kind of laid out in front of us. Like, well, wait a minute. If this is going to pull back more than 2 or 3%, the next time was 6.5%. Let's see where that lands us. 6.25% to the moving average, close enough. 14,057, 14,000 would basically be the 6.5% pullback, just eyeballing it, which fits perfectly as far as a major psychological rejection. Reject with a miss off 15,000 because they never hit it, rotate all the way down to 14, and then pop back up, or even better, that bigger pullback we've been talking about. Get that little trap inside that swing where everybody's stops are on the planet. Super obvious, right? Take their stops out and then scream it back to the highs. It just doesn't make sense to not see this follow through at least a little bit with the way that it looks, even without today as part of the equation. Just looking at the top 2 candles, we're very likely going to close underneath the previous day's high and potentially within the open to close, if not more, right? So the bears definitely have some emphasis, but do I want to sell way the heck down here? Nah, a lot of the times they're pretty weak. Deeper, well, and a deeper pullback would put us at right around 14,000. If it does want to pull back to like 8%, where does that land? Where's the larger? Wow, let's talk about perfect, huh? 8.9% would be back to the larger moving average, 13,659. And if we're looking at the deep pullback, that 12%er, what's this new low? That's 14% would be the low underneath this for the trap. I mean, it all lines up pretty well with a lot of different zones, but the thing is, there's a lot of space in between. You know, like, do we really want to be a buyer until we start getting down to the 6%, 8% area? Probably not. Makes more sense to be a seller. Sellers are just railing this thing right now. That or longs are stuck, one of the two. But if we look at the overall volume from the top, the last time we had a confirmed swing from the bottom to the breakout of the highs, I forgot it takes a second. Hang on. There we go. We had that previous POC, which was right here, that did offer up. That was also an L1 and a million other things. That beautiful swing long to the upside that landed up into a new high. Since then, they just pierced a new high. Let me see if I can fit it in there. Yeah, you can see it just poked its head above the top there. And now we've got the rollback to the downside. So the initial thought process is, oh, okay, we've got a 5-wave correction to the downside. You've got 1, 2, and then we've got 3, and then, oh crap, that doesn't work. Because now we've got the lows of wave 1 into 2. That can't happen. That breaks the rules. So this has to be part of all the third wave, which guess what? Means that there's more to come. Now, let's analyze the way that leg 2 or wave 2 happened. It was kind of quick, right? It really didn't stick around very long, and when it broke down, it just ripped through the lows. Chances are, when wave 2 is nice and clean, wave 4 is a mess. That would make sense with more continuation down, that we would go sideways, noting that all of the buyers are trying to BTFD if they go just a bit further down. Seeing this transition into a range with that in mind makes perfect sense. Then we could see something along the lines of this first drive down, continuation lower wherever that happens to be, nice little 0.38 pullback, continuation down into a 6-1 drop. Right? This would be the ideal scenario. We're at a 3, well, I mean the 3618 is just a bit further up, right? So that's kind of where it is at the moment. Very interesting to see how that will potentially play out as we go into the open. Now, looking at the 15-minute chart. That's right, all my drawings are gone. Here we can also see what we were just talking about. We've got this nice continuation down. We've got the drop down. This cannot be it, so we've got to keep going. Maybe this was, and this is the final move. If that's the case, then we should see a bit further down. Either way, it doesn't matter. It still makes sense that we should stay on the sell side. Looking at it so far from this morning, really we haven't stopped going down. We started with that little bitty move to the upside, and since then it's just been dropping and dropping and dropping. Started off with an attempted hold of an L4, but they couldn't quite get the breakdown before creating a new low close, but no new low. It transitions into a significantly more delayed L4. They tried reaching out a couple times to get the L5, but they couldn't quite do it, and then rotated down. So with an L4, typically when you have an L4 that finally breaks down, they're likely to hold an L1, or that's typically the guideline, and as long as they're following that, which they did, that's usually what you're expecting to continue that movement. So we've got an L1. Now, from here, we don't really have anything left in the story. We've got our typical guidelines following through, but now we've got to wait. We've got an L2, and then an excruciatingly aggressive breakdown. So now we've got an L4 into an L1, following the rules. L2, we're kind of waiting a little bit here. We continue down, the next one's an L1. Now we're pulling back, we're trying to hold off of the L1 again. The last time, and the only other thing that we have to work with historically speaking, at least, is that we went from an L1 back to an L2 and then dove. So right now, I've got a little bit less respect for this L1, unless we see something drastically change. Then maybe. Right? Right now, they're trying to get the volume to dive under. See if we can get this thing to cruise. Oops. Get that out of the way. Where the heck is my chart? Ugh. All right. So as it stands, sellers are trying to get this thing to rotate to the downside. We do have a reason to believe that sellers are holding pretty nicely, and to be fair, they did respond to the previous volume, albeit very short-lived. They are trying to respect that dive down. So I have to give it to them, even though I don't want to be a seller down here. I have to assume that they're going to be able to follow through. The only thing right now, obviously, is timing. It's incredibly awkward. From the top all the way down, just taking in the entire move, the POC has shifted down 14,533. Definitely something to keep our eyes on here. Either way, if I'm going to be a seller, I don't necessarily want to be a seller way down here. And if I'm going to be a buyer, I have to wait for more proof. Sheesh, what a crazy move. So, fairly obvious leg down, big old breakdown. And the continuation lower. From here, we're likely just going a bit sideways. We've got our first ABCD back. Now we're starting to dive down. So that bear bar right there, that's something to potentially get them going. I just hate that it's happening at the open. Man, what terrible timing. Another really strong bear bar. I mean, it is following through. It makes sense, but ugh. Nice return back up to the POC for a continuation move back down. Nice retest. There we go. Nice weak bear bar, or bull bar rather. Continuation back up to retest the L1 and then immediately diving back down. Jeez. Sellers mean some definitive business here, or at least they're trying to. Most of them showing up around the L1. We're dealing with some incredibly wide ranges here. Jeez. That little dive back was a potential break-even snap there. So popping back up and retesting this area of interest is going to be an attempt at swinging the stops at the 560s. And this would be that push back up to the L2s. So they tried to get that reversal back underneath the L1s. They couldn't quite get the job done, although they still haven't hit the L2. Sheesh. All right, well, if the market does just dive down from here, I've got to assume around the 18s first. This bear dive back to the downside. Jeez. The buyers did not want that bear bar to close underneath it. That's a huge problem. First objective taken off. Second objective back down. Beautiful slide. Unfortunately, I wasn't able to get more back up in the L2, so they made me have to just kind of deal with it. But after a little bit of herky-jerkus, herky-jerkus, I like that. We'll stick with that. A little bit of herky-jerkus at the open. Not too bad. There may be a bit more continuation down, but again, with the jerkus in the middle there, that kind of makes people quicker to take profit. Reconfirmation from the bears here, looking for a continuation down, makes sense. It was getting a bit shaky, but that bear bar closing back down helped them out a lot. Wish I was able to get a little more. So we've got the L1 continuation down. Now, if we're looking at it from a cycle perspective, we've got an L1 into another L1. That hasn't happened before. So now we have a potential creation of a new bear trend to the downside, looking for the third retest of the L1. Doesn't necessarily have to hit the L1. Historically, we've seen it go back to the 2s. In the 2s, just note where that is, right? Some pretty good reasoning to like a 2 right now, as far as a trapper is concerned. Sheesh, what a mess. Getting real jumbled up down here. This is potentially, if we widen things out a little bit, although it's fairly obvious we had a nice little ABCD correction inside of here. It was just a bit wider. This may be the start of a new dive down, or this could simply just be, because remember we were talking about how the last wave of this move should be gross. This makes a lot more sense now if this were the new low. Modify this a bit further forward. That fits the bill of what we were expecting, right? Beforehand, it didn't fit the bill. We had this really nice clean drive down, easy wave 2. That usually means wave 4 is going to be a train wreck. Well, this being a wave 4, I mean, it kind of fit for a correction, and we did have an ABCD back, but it didn't fit what we were expecting. This makes a lot more sense for the final press. This being the low down here from a swing trader's perspective, out of the money options, binaries, whatever, longs are going to be looking for interest down here. Low probability, very nice reward versus risk. Location wise, it makes a lot more sense for this to be the final press from what we're seeing here. Which means that the ABCD corrective phase should begin over here instead. Not that we didn't have one, of course. All right, a little more down, a little more up, kind of popping around, retesting the L1 again. This would be the third technical retest. So this is the triple down L1 right there, right out of the textbook playbooks. 14,520. You'd have to have a limit order there, a blind limit order to have been filled, but that's where it was. I have a little bit of a tough time wanting to go short for the context that we just talked about. First bear bar on the S&P, even though looking at the S&P from the bigger picture, we do have an incredibly massive outside gap to the downside. I mean, gargantuan. One thing that we may want to consider, given the size of this gap, is a half gap. That's not something we've had to really deal with too often, but a half gap should put us... hang on one second. Do I even have a measure for a half gap anymore? All right, well, hang on a second. All I need is 50%. That's the only one I care about. There you are. So the half gap would be at 42.9263, rounded up 75, rounded down in this case because we're underneath it makes more sense, 92.50. That would be the expectation to find some resistance there if the market's going to respond with a bullish rally to the upside. It's likely that we do close down today. It's not expected that we close up, but we know how the market loves its V-bottoms lately. As far as the first 5-minute volume is concerned, the first 5 POC is down. There it is. 42.65. And as far as the NASDAQ, oh, stop. Just let me see the volume. Got this first 5-minute bar. Oh, jeez, oh, Pete. 14,495 is the POC at the bottom. For real? Man, we were just talking about how this is potentially getting really, really down here and possibly becoming the low. And now we see this? Sheesh. 14,500's now the POC, which migrated up from where it was a little bit. Holy cow. Again, this makes a lot of sense for that 5-wave completionary move. Now it would be an ABCD correction back. Typically, an ABCD correction back is usually a 5-wave pulse. We've got 1, 2, 3, 4, 5. That's usually wave 1 of the ABC. So we've got A to B. Now you're looking for C to D. That'd be the perfect time for that L2 pullback. This is where a swing trader is going to be looking for those shorts. I hit that note pretty well, if I do say so myself. as the viewership dives, we are holding this L1 still. They're trying to hold. Hang on one second. My neighbor's asking if we lost power. No, we're all set here. And I haven't heard my battery backups or anything go off. Oh, sorry. I thought I muted the microphone. My bad. I do voice the text. Okay, sorry about that. Little more of a continuation dive down, but again, given the context of what's going on, this makes more sense that we may see another leg back to the upside trying to get the 2. No news today, like at all. So that's something to consider. The market coming back to retest that previous confirmed volume node and rejecting back down. I was still hoping for that L2. We haven't broken a new low though. First 5 POC is down at 14,495. If we're looking at continuing, the POC has technically shifted on the first 15. The first 15 now, which is still developing, has shifted and just shifted again. Never mind. We're going to have to give it a minute. It's bouncing around a little bit. Back down here to the 495s. We still haven't broken a new low, although the L1 is continuing to hold. If sellers did take this short and they were blind selling off of the L2 and they put a actual risk objective to the downside of a 2-to-1, obviously the scalpers are done. The 2-to-1 would be underneath the lows. So, I mean, the only way that would make sense is if they were entering up a little bit further or if they were building in, got their average better. But blind entry 2-to-1s are just underneath the low at 85s. Still something to pay attention to as far as an actual risk objective goes. Although we already know a new low is going to be difficult, that makes a new low even more challenging to actually stick. If we continue on the S&P volume on the first 15, we can see that it hasn't changed. 4265 is still where the dominant volume lies. The NASDAQ still has not broken down to a new low. And again, we're still expecting that ABCD correction before it breaks a new low. An ABCD might just be a wedge. Remember, it doesn't have to be all the way back up to a 1-to-1 move. It could easily be a wedge and then a breakout. But either way, we've got to be a little bit on our guard here. It makes so much sense for a bigger move back up to an L2. Doesn't mean it has to happen. Got a beautiful first trade of the day. Looking for a bit more to see what the market wants to do, although I am concerned that we are in a corrective phase with an ABCD move back up, which is still completing. It's following exactly what you'd expect. We're starting to push back up into those 2s. That's the hot spot. From the 15-minute perspective, we haven't hit that major zone of interest yet, right, that we were talking about on the much larger perspective. From the 500 tick, if you're waiting for a bit of confirmation, the 2s are, you've got to wait, right? Lower high, something along those lines. Otherwise, a low risk, high reward scenario would be blind selling at around the 51s. The stop wouldn't be very big. You'd have to go for a 2-to-1 at least, which fits. So they're kind of up in this area, trying to get this L2 for a continuation back to the downside. We haven't seen the volume shift yet. We're bouncing off the 14,500s. Okay, well, I'm just going to take the target there. All right, thank you. I wasn't expecting it to dive that fast, but I'll take it. Looks like everybody did the same thing, too. Jeez. How are we supposed to get runners if y'all are jumping? I mean, granted, I only had the one, but... We're still in the L2. This is where a lot of shorts will still be trying to hold, but really nice rejection off the L2. Just needed to wait a second to make sure that there were actually sellers there. Well, there were for a second at least, huh? Swing longs are already long. We've been talking about that for a while down in these 14,500s. Makes more sense for a continuation phase to the upside. We are starting to break above the previous top of that major swing over here. So breaking above that previous major swing, I mean, geez. Side note too, I will be recording an extra video. I've got my normal video scheduled to launch today, but I'll be doing another video that I'll try to get out today because we did hit the next subscriber mark at 1950 on our road to 2,000. So if you're not subscribed and you're listening, subscribe, because we're doing a giveaway. And that giveaway video, I'm going to be recording the second giveaway of the 4 to come on our road to 2000. The next giveaway after the 50s, the 1950, will be 1975. We'll just do them in 25s. Makes it nice and easy. So I'll be trying to record that giveaway video today, and hopefully later today or maybe tomorrow that will be released. Woohoo! On the way. 2000s right there. We do have the higher low. We've got the ABCD corrective phase back up into the L2s. If we hit L3, we know something's wrong. They're not following what you would typically see, which, you know, again, from a bigger perspective, makes a lot of sense. We know a lot of traders are taking profit. The S&P jumped all the way back. Jeez. It's like, what, breakdown? What breakdown? What are you talking about? They closed all the way back up, too. Man alive. That's bananas. We are getting really close to that S&P down in the 3% zone. Remember, BTFD buyers, they're going to be buying heavy down here. Long-term, not necessarily long-term. A 3% pullback's no 80%, or, well, 50%, but a 3% is a nice little short-term dip. If buyers are assuming that the long-term trend is still intact, this is where they're going to start buying. Really nice spot. So again, long-term option traders, etc., definitely long, and they're definitely looking to keep this thing going to the upside. And this is a good start. We've got that middle portion with a higher low now. So as far as like a 5-wave move to the upside, that would satisfy so far at least 1.62 or so. It would be nice to get to the L3s to prove confusion. And then we could get a nice pullback to L1. And then we could get the continuation back to the upside. Whoo, man, that would be nice. You can already see it. L2s are still holding it, but it's dirty, dirty, dirty. If they are shorting it in this area, if anything, they're more likely. The short-term sellers got stopped out, the low probability sellers. The higher probability sellers likely selling more at the top of L2, having the potential of averaging out, taking a slight scalper's profit. Their average would be in the middle, of course. So if you're measuring from the middle to the actual risk, we're hitting their scalper's target right now, back to the bottom of L2. If they do want to continue down a little bit further, that would make sense for that deeper continuation. I just don't really want to see them break underneath 38 quarter yet. POC is just totally bottom weighted on the markets, which is definitely suggesting further upward continuation, at least sideways to potentially up. What a mess. Let's see if we can get a bit more continuation in terms of what they want to do here. Right now, though, geez, look at the S&P all the way back down again. I'm curious, though. 65, 64, 63, 62. If buyers are trying to buy it, demonstrate support off 62. That would be their last ditch, and they are showing support. So there's 1 minute left. I'm curious to see where this current 5-minute bar closes. Closing above this 42.65 would be pretty telling. Although the market's coming down pretty heavy here. They have now invalidated a 5-wave continuation to the upside in an impulse manner, which means that this is more likely a corrective phase. I have no idea how to trade the ES today, all the jumping up and down. Yeah, for sure. I mean, one of the ways when I'm looking at a market that's moving around like this, we've got to be on the extremes, and it's going to feel super uncomfortable pretty much at all times. The market really tried to get a continuation back up, couldn't even trigger the bulls in, and is rotating down. I would be incredibly careful on the long side right now. So buying underneath the low, I wouldn't want to buy the exact low. It wouldn't make any sense. Instead of buying, if I wanted to fade the bottom as an example, buying 42.57 quarter, that wouldn't make any sense given the context. I would rather offset to 56 quarter, a point underneath it, 2 points underneath it, 3 points underneath it, just offset a little bit because we know that there's downward pressure. If I were looking to sell, I don't necessarily have to offset because I've got the aggression. Look at this bear bar to the downside. Shorts are definitely going to be looking for that to continue. Now, at the same time, if traders are approaching this as a range, they'll buy this as a washout. But if that were the case, then why did it gap from close to open, gapping down? That's a bit of a red flag, you know? File that under hashtag just saying. POC still way down at the bottom, 495. So in this case, right, if I were looking to want to be a buyer, first off, we need some type of structure, which, give me a second, happens over here. So, I mean, the only other structure that we really have to work with on the S&P, that's a potential range low that begins around the 42.55s down to the 53s, but potentially all the way down to 51. So let's say 55 to 50. Make it nice and broad. If that breaks, then there's nothing until 42.42. It's another 10-point drop underneath it. So bears know they have a really strong reason as to why they would want to be sellers here. I would really love to see them come back to 60 quarter. L2 sellers still looking for a continuation phase to the downside. Technically, this does satisfy the ABCD correction back up. Job done. A little bit weird, but job done. Now we could be in store for something along the lines of lower high, maybe. Be around the 56s. Or it could just dive from here. ABCD done? Good enough. Just need to give me a chance to enter. Yeah, exactly. If we continue the POC forward on the NASDAQ, we can see that the POC shifted up underneath this bear bar, which would potentially suggest that if longs were long, they're exiting underneath this bear bar and shorts are beginning to dominate. It makes a lot more sense that sellers start returning back down to the lows. I wish they would have done it in a little bit of a nicer looking way, but, you know, hey. I guess technically they got the L2. Job done. Like, a couple nice plays along the way, though. Now that the L2 is continued, we've got a triple L1 to the downside, which was pretty gross looking, but still technically finished the job. And now we've got the L2 for a finalized move. Doesn't mean, again, that the market has to bottom out here, but again, it is more likely that we see an ABCD phase. And given that this was much larger than a one-to-one move, and given that this was expanding now outward, we likely have an expanding correction phase, which is probably going to be somewhere down around the 3/8 as far as the bottom is concerned. And then back up 6-1. So look like that. That would place likely supported around the 63s or so. I'm obviously not going to get filled on the S&P. Thanks for no freaking pullback. Man, I'm feeling you, Steven. Jeez. Give me a chance. I barely ever trade the S&P, and when I do, I don't get filled. Let's be real here. Got about 5 minutes until we go into 10 o'clock. Feel free to type in those questions, and we'll start rolling into the extended session for members and VIPs. Yeah, I mean, we've got to give it. It's just desserts. That's not what it's not about justice here. It has been following the technical rules perfectly, right? It's been following them perfectly. So As far as like the 5-wave structure to the downside, wave 2 was very quick and decisive. Therefore, wave 4 should be gross and nasty. It was. It made more sense for us to move the measurement over. Once we realized that measurement was the case, wave 5 completing a new leg down made a lot more sense for a corrective phase back down that allowed the sellers to go all the way back up into the 2s. Once we hit the 2s, after 3 perpetual L1s to the downside, we hit the L2, it rotated down to a new low. It's doing everything the way that it should. It's just doing it in like, all right, job done. Got everyone trapped. Let's go V-top. And then it goes all the way back down to the lows. Or V-bottom, all the way back up to the corrective phase. At the moment, what this is doing is giving us context in terms of who is in control of the market. And I believe I've got a video that's scheduled to launch or it might have already launched on YouTube, going over the morning POC and putting the POC on the different foot, I believe is what it was called. And that's the concept here, where if we're continuing and we start at the beginning of the day and using a little bit of candle psychology here, we start with a massive outside gap to the downside, huge bear bar, big bear close, POC is above. Sellers are obviously all over this thing, right? But what's the next candle? They trigger in shorts underneath, only to reverse back up with a weak bull bar. Now, I say weak because they couldn't even close above that previous candle's open, the open of the day, in this case. So when we rotate the volume further forward, what happened? Well, at the close of this 5-minute bar, the volume shifted nowhere. It's the same spot. The POC is in the same place, but market is above. So it's attempting to get the bulls involved. If the bulls are going to get involved and take something over, they're going to have to break the highs of the first 5-minute bar at least. And at the time, this cycled all the way back down, rolled a new low, then jerked all the way back up to a new high in a bull engulfing candle. If we look at the volume, by the time that candle closed, what happened? The POC didn't move, right? So if bulls are going to take it, if this candle triggers, right, we already know that engulfing candle buyers are in. 100% guarantee engulfing traders are in. With the POC not shifting, totally, I know they're there. The rest of the buyers are going to pile in above this bull bar triggering. Now, in order for the sellers to succeed in a move down, they can't let that happen. Right? That can't happen. There's too many buyers that are going to be above this bull bar. If they're going to try to hold the market down, maybe they're reaching out for bigger targets on shorts. I don't know. Maybe they're reaching out for bigger targets, doubling down. Who knows? But they can't let that trigger. Otherwise, that's a problem. And the fact that they closed back down, inside bear down, and this isn't just an inside bear bar like, oh, look at all the wick. This is an inside bear bar 10-pound sledgehammer coming down on your foot, right? This thing is ready to just annihilate. And the fact that they didn't trigger the bulls in, like we were talking about, every reason in the world for shorts to jump in. I was trying to be a bit greedy, get a better fill. I didn't get it. That's what happens when you get greedy sometimes. But the continuation down here makes a lot of sense. And now look what's being created. Huge candle gapping, right? Like massive candle gapping. It's closed up a little bit, but this is still showing some objectives to the downside that are open all the way down to 42.34. Same spot that we were talking about in the other picture on the 15. So there's every reason in the world to still want to be short. Sellers will short 1 point offsets on the close of this bear bar. They'll sell this bear bar. They'll sell into the gap. They'll sell above this current bear bar's high. They'll sell 50% back into the previous bid. It doesn't matter because they know the context is down right now. Yes, we're at a -2. Holding on to this to the end of the day would be near suicidal in terms of account lifespan, right? Terrible decision. -2s typically mean that we're going to be closing by the end of the day above 49s. But we've got 7 hours left, right? They got tons of time for this to bounce up easily 0.5%. Or go down 0.5% in this case, right? So there's a ton of time for this market to fall before we catch that reversal closing all the way back up above 42.50s. It doesn't have to happen right now. And in fact, it probably won't, given the way that this is looking. It's pretty strong. Didn't quite make it down to the objective down here, huh? What did they make it down to? 1.29? Okay. So as far as adjusting the order flow, I like seeing the first 5 and the first 15 because that's usually who's controlling the market in the first initial drive, right? That first drive out of the opening gates. You see the volume control usually created within the first like 15 to 30 minutes, depending on how long they get stuck there. But right, in terms of like drawing it later in the day, or, you know, we're going on 11:30, yeah, I might want to draw it further forward to see if anything's changed for sure. But that's why I look at the first 5 and in the first 15 POCs, those areas, because those are the ones that sort of dictate where the market's going to go for the initial move. Yeah, definitely. I believe the video is called Putting the POC on the Other Foot, or something along those lines. Because again, I usually look at it from a trapped perspective. But you don't have to. We are going into 10 o'clock, so let's get those last questions in and we'll wrap it up. Again, I will be recording the giveaway video. We did hit the next milestone at 1950 on the road to 2000. So we will be doing the next giveaway video. I'm hoping to launch that video later today or tomorrow. So make sure to get those comments in the giveaway video if you haven't already. And look for that a little bit later, right? Still getting a little more continuation down. Are they going to get that 3.8? There they did. All right. Now I'm curious if they really want to rifle this to the downside, because we don't have a very clean structure here. We've got what, like this first move and then and kind of second move. Like, it's really nasty looking in here. This feels like it's all still wave 1 of a potentially larger move. Now, the other side of things would be that this is looking for a larger measured move, which is usually the case when they dive. And that's where we can look further out. We already know that measured move is also floating down in the 30s, a little further. Do we need to comment again, or is it based on the previous one? No, it's based on the previous one. I'm going to keep using that one on the road to 2000. And then after we hit that milestone of 2000, then I'll do a new video every time we hit the next big thing, which is after. I'm doing it every 25 right now because we're only 50 away from the goal. But going further forward, then we're going to be doing it every 500. So when we hit 2,500 subscribers, then I'll do a video saying, all right, this is the one that you guys need to comment on to get in the giveaway. But for these 4 that we're doing, it's all still part of that same video. I mean, you can comment again if you want to, but I don't accept the, or it doesn't take into account multiple comments. So swing longs again will be hitting down here. Although we're kind of in an awkward location, because we're completing, again, from the long perspective, we're completing major objectives for shorts. And typically when you hit these, it's not necessarily the time where the market puts in a bottom, but it's usually where the market goes sideways and could potentially transition out of a bottom and start a new move to the upside. So being way down here in the 14,450s, that makes things a little bit awkward, you know? It's a little bit weird down here. Might have to zoom in a little bit closer and just scalp the psychological side of things when we get into the extended session. That'll be some fun. Maybe that's what we'll do. Look at this continuation down still. Jeez. Anyway, I'm not seeing any other questions coming in, so that's going to do it. As per the usual, if you do have any questions that I missed, you can always shoot me an email, jhb@ssftg.com. You can also drop them in the comments on this session, and I'll see them there. But one way or another, we'll get you taken care of. For the rest of you who are hanging out in the extended session, just hang tight for a second. I'll get everything settled, and we'll move over there, and maybe we can get some scalping going. For the rest of you, if you're ducking out, I hope you had a fantastic day of trading, and we'll see you all back tomorrow. All right? Enjoy, rest up, and we'll talk to y'all later. Thanks.